Have you received any notices from your credit card company lately? You had better read them now. I'm Dan Ringer, and we'll talk about credit card changes right now on The Law Works.
From West Virginia Public Broadcasting.
The Law Works is made possible by the generous support of the West Virginia State Bar and the Monongalia County Bar Association.
Congress is talking about changing the laws concerning credit card accounts, but the credit card companies are ahead of the Congress. My guests are Deputy West Virginia Attorney General Jill Miles and Assistant Attorney General Chris Hedges. Jill, thank you for coming back, and you also, Chris, you've both been here before. Credit cards, well, most all of us have them, and they have been in business for 50 years or so. Haven't they been working pretty well? What's the problem? Why do we need to change things?
Well, one example, Dan, is a 48-year-old mother who filed a complaint with our office. This is someone who's had a credit card, the same credit card, for 10 or 15 years and been a good customer. Always paid on time, paid down the balance consistently, paid off the balance consistently, and always kept low balances. Well, she got a notice in the mail that her interest rate was changing from 11% to 18%, almost 19% in a one-month period. She had no reason to think that her interest rate would change, and so she called to ask why, and the credit card company told her it was because of what they call universal default. They said that she had a negative reference on her credit report from some other bill that she had paid.
Wait, she had done everything she was supposed to do with the credit card company. She had honored her contract with the credit card company, made her payments, used her card the way it was intended, but something else had happened in her life?
Exactly. The credit card company told her they couldn't tell her exactly what the credit reference was, the negative reference on her credit report, but they would sell her a copy of her credit report if she wanted, to charge her even more money. But here's what happened. Instead of buying a credit report from her own credit card company, she went online, got a free copy of her credit report, as we're all entitled to do once a year, and she found that there was a negative reference on her credit report. In fact, it was an error. It was a medical debt that she had paid in 2007. She had paid it on time. She had paid it in full. But for some reason, it showed up as a negative reference. It showed up as being late and unpaid on her credit report.
And that could be something as simple as a bookkeeper going down a line on a list of unpaid accounts or on a list of accounts and getting the name wrong and sending it off to the credit reporting company.
Absolutely. And the fact of it is, probably at least a third of us have incorrect references, negative references even, on our credit reports. So she did then everything that a consumer should do. She contacted the credit reporting agency, the credit bureau, and had this negative reference completely deleted from her credit report. She disputed it, got it completely deleted, and got all of her ducks in a row. She got all the proof, all the documentation, contacted her credit card company and said, here, this is to show that this was an error. This never should have been on my credit report. Please change my interest rate back to where it was. And her credit card company that she had been doing business with for 10 or 15 years refused to change her interest rate back to 11%.
She did everything right, had been doing everything right, but her interest credit rate increased. Lewis Carroll writes about things like this in Alice in Wonderland. And when the error is finally identified, the bank won't undo it.
That's right. That's right. Even if there was a situation where the bank had made an error. We had one consumer who filed a complaint with our office about a similar situation where her interest rate increased from 8.9% to 18%. And that was based on her having exceeded her credit limit. And she asked them, how could that possibly be? Because she hadn't made any charges or any balance transfers or anything for months. And they told her, well, you've just done this balance transfer of $6,000. She said, no, I haven't. And in fact, that particular credit card admitted that they had made a mistake. They had transferred someone else's balance onto her credit card that put her over the limit, charged her over limit fees, increased her interest rate, and they eventually corrected the balance transfer, took it back off of her credit card, admitted that it was their fault, but they refused to change her interest rate back down to 8.99.
It's a dirty little secret of the credit card industry. I have a friend who used to work as a customer service representative for one of the largest banks in the country, the person you call to have problems resolved. And as he related it to me, they were to do the minimum amount necessary to resolve the instant problem. They were try to upsell the customers to things they didn't need, didn't want, and weren't in their best interest. And basically, they were to lie to them to just get them off the phone, and it may take months for the prevarication to be uncovered. And by that time, things might have changed completely, and the customer might never get a resolution. But the way things worked was people are totally dependent on credit cards. In fact, if we were to take up a collection, I dare say, of the money that the three of us are carrying right now, we probably might be able to buy lunch for one of us. Because I know I have nothing in my wallet. I don't carry money. Well, we have a slide that talks about some of the things that are going on in the credit card industry. And just the first of the one is interest rate increases. What else is going on?
Well, in addition to those other matters, one issue that we've been seeing, been seeing is such as the case of one 82-year-old retiree that filed a complaint with our office. This elderly gentleman had a 2.99 fixed rate offered to him for the life of the balance for any balance transfer that he might decide to make onto this credit card. And going on this promise and relying on that promise from the credit card industry, he transferred a few balances over. I mean, some consumers are even transferring their auto loans onto these types of cards.
Well, sure. If you get a 2 or 3% interest rate, and I had a balance transfer interest rate offered to me of 0% one time, you, as a business person or making sound business decisions in your personal life, you'd be nuts not to put as much onto that as you can, because you can't buy money like that, and a loan is really just buying money. You can't buy money like that any cheaper anywhere.
Exactly. In the case of this particular gentleman, he had this low fixed rate for the life of these balances, and he counted on that. So what happened is he got a notice in the mail that his credit card company was, instead of immediately raising his interest rate because they didn't have an excuse to, they said, we're going to change your minimum monthly payment from 2% of the principal to 5% of the principal.
Which was not part of the guarantee when he made his transfers and opened the account.
Exactly. So that, since he had the high balance because of all these transfers, it made a $390 minimum payment into a $967 minimum payment per month. And that was almost the amount of his Social Security check for the whole month. And he called and said, you know, what can I do to change this? Some months I can only pay, this is a guy who's always paid more than the minimum payment, but some months are harder than others, as we all know. So he knew that he couldn't pay this consistently. He called to ask them what he could do, and they said, well, we can change it back to 2% monthly minimum payment, but to do that, we have to change the deal. And instead of charging you 2.99% interest, we're going to charge you 7.99% interest, and you'll have to agree to this change.
So they increase the interest rate in exchange for reducing the amount of the payment, and I would expect in a great many cases, all of a sudden the amount of your payment is less than the monthly interest rate being monthly interest being charged on your account, and you would never get out of debt.
Almost. The minimum payment always has to be in a scenario where eventually you can get out of debt. But what you say is that is almost the case.
And eventually is a long time.
Right.
So back to our slide, we had interest rate hikes. We have fixed rates changing to variable rates. We didn't talk about that, but you might have a 2.99% interest rate, and they changed that to being prime, which is a commercial interest rate, plus a number of percentage points.
Right.
So you might go from 2.99 one month to 8.99 the next month to 12.99 the month after that, and it might come down. Mm-hmm. And then we have the increase in the minimum monthly payments by sometimes huge amounts.
Yeah, what these stories are that Chris is sharing with you is how the situation exists today. We have what's called the universal default clause, okay? And under the universal default clause, you can make a payment on a credit card, never be late, never miss a minimum payment, but you're late on another bill, and they can raise the interest rate on your card. Today, they can raise the interest rate. You have a $1,000 balance. Let's say your interest rate was 10%. They decide to raise it to 17%. That 17% would then apply to the $1,000 of your pre-existing balance.
The balance you had before you did whatever it was that caused you to be universally in default.
Right. Today, right now, as we speak, the credit card company can charge you any interest rate that the market will bear. The sky is the limit. So what happened is Congress realized there was a problem, and they felt that it was necessary to pass the Credit Card Accountability, Responsibility, and Disclosure Act of 2009. That was signed into law by President Obama on May 22nd, 2009, but it doesn't take effect until February of 2010. And what's happening, what the credit card company realizes, is that they have this window of time where they can do a bunch of stuff because they're going to lose a lot of their income. And that's what that slide is talking about.
Do a lot of stuff. It's a nice way of saying it.
Right.
They're putting it to the consumers.
Right, they're putting it to the consumers because what this act does, this act changes the rules. Today, all they have to do is give you 15 days notice and they can raise your interest rate regardless, immediately. Now, under this act, within the first year of the act, they can't raise the interest rate at all unless you're late on your payment. No more universal default. After that, they have to give you 45 days notice. Under the act, there's no more applying the new interest rate to the pre-existing balance. So what the credit card companies have realized is they're going to lose a lot of income. So they're taking this window of time, and they are doing all these things that we've identified in this slide.
Well, one additional thing, and I have noticed this over the years that we have listed there, is grace periods for the payment of the account is going to be eliminated. I noticed a few years ago that grace periods were getting shorter and shorter and shorter, to the point now where if you receive a bill in the mail on Monday, given the delays that are inherent in the postal system, you may have to write your check the next day, or it won't get to the company who wants to be paid in time to keep you from going in default. And it is remarkably easy to miss a payment. I'll give you a personal story. I have a confession to make. I bounced a couple of checks this past summer. I wrote the checks on Friday. I intended to go to the bank on Monday. My secretary stuck them in the mail so it would be picked up on Saturday. So the checks went out on Saturday before I went to the bank on Monday. Well, I had a medical problem, and Monday morning I was in surgery, having this medical problem resolved, and I was there all day. And by the time I got back to my office 2 days later, I had gotten notices from the bank that the checks had bounced. They had paid them very kindly, and they had charged me $20 or $30 a check. I ended up with a bounce check fees of about $200 because of this. And fortunately, I was doing business with a local bank, one where I could literally pick up the phone and call the president or the branch manager, as the case may be, and talk to them if I wanted to. But there are some banks that would have reported that instant like that to the credit reporting agencies, and if that had happened, all my interest rates on everything would have gone up.
Absolutely.
And small business people oftentimes use credit cards to finance their businesses. Not necessarily the best advice, but it's sometimes inescapable. That's the way things work. So grace periods are being eliminated. What else is going on?
Well, in this window period, you're having things like, let's say you have a fixed rate card, a card where your interest rate is 9%. That doesn't change. They can then change you to a variable rate interest, which is tied to the prime rate or the Treasury bill. Those interest rates can change all the time. What Chris mentioned with the minimum payment, they're saying, okay, look, we've got to make up our money now. We're going to increase the minimum payment as a way of negotiating with consumers so that we can raise what they thought was going to be a fixed rate.
What about things like the benefits of membership
Right.
that we hear about? At one point in time, you could get a card, you could accumulate airline miles if you bought a pair of shoes and things. What's happening with all of that?
Well, that's being eliminated as well. And that's all in response to this legislation, which is very good legislation. When it goes into effect in February, it's made sweeping changes that will benefit us all, but they're taking advantage of it. You're going to lose your frequent flyer miles. You're going to lose your points. What somebody was talking about on the way up here, getting cash points, when they use their credit card. Credit card companies are saying, hey, we're going to take this window period and we're going to get rid of these benefits because we realize in February we're not going to be king of the hill anymore.
Has anybody thought of charging you a quarter every time you use your credit card?
I don't
It's
know.
like airline baggage fees or bathroom fees or want to buy a package of peanuts. I mean, the airlines caught on to this a couple of years ago. Banks just now seem to be catching up to them. Why not? Well, I shouldn't suggest things like that, I guess, because if somebody hears it, they may want to go for that. One of the things that we have grown to appreciate over the years is that we can typically get credit cards without an annual fee.
Right.
Some banks are starting to charge annual fees now where they didn't before.
Right. Basically, 80% of all credit cards, there is no annual fee. And again, in response to this legislation going into effect in February, they're taking this period of time and they're going to say, okay, I don't have an annual fee. I'm sure you probably don't have an annual fee on your credit card.
No, I had one once, and as soon as I saw it was going to have an annual fee, I canceled it.
That may change. They might take that opportunity to recoup their losses by charging you an annual fee.
What kind of figures are we talking about for annual fees? We're not talking $1 or $2.
Well, I don't know. What do you have an annual fee?
At least $50, and likely $100 for some.
And some of the prestige cards come with very substantial annual fees. And a good friend of mine once asked me, the card that I had been offered was an American Express titanium embossed platinum solid gold card. They put these fancy labels on them. And he said to me, are you trying to impress the cashier at the restaurant? Well, why would you do that? Because all credit cards work the same. So any old credit card is just as good as any other unless there's a reason to have that. Now, some credit cards would have unlimited fees on them. American Express for years was famous for saying you could charge as much as you want. There is no credit limit. I had one. I tried to buy a computer system. The bill for the computer system was going to be $5,000. They called me up and said, you can't charge that much. I said, but wait a minute. You told me I could. They said, no, you're acquiring a capital asset. You're not spending money for a trip or in restaurants or for hotel bills. You're buying something, and we're not going to let you do that. I said, but if I don't pay you, you can come get the computer. If I eat it in a restaurant, you can't come get anything. And I canceled that card, too. But canceling cards can be dangerous for your health.
Right. One of the things that can happen is, let's say now they raise your interest rate and you decide you're going to cancel that card because you no longer want to use it. You don't want to pay the higher interest rate. Well, now what you owe is significantly higher to the credit that you have available, and that's a negative on your credit report.
So if you try to be fiscally responsible,
that's right,
you harm your credit rating, so you can't do as well financially as you would do if you were irresponsible.
Right.
That's right.
One of the great scandals over the years has been seducing people to incur great, huge lines of credit, and particularly young people. Does this bill address any of that?
Oh, absolutely. This bill, that's one of the best things about this bill, is under the bill, credit card companies will no longer be able to solicit people under the age of 21 and get them to apply for a credit card unless they can show, unless they have a cosigner, or they can show that they're financially independent.
Now, traditionally, though, college students were being enticed with free things to get credit cards.
Mm-hmm. Well, one consumer spoke with us about exactly that situation. He was walking out of the student union one day, and a fellow student handed him a flyer. Was handing out flyers to everyone, and advertised a free calzone.
I would take that.
I would take that as well, and I probably would have done the same thing as he did. What he did, if there was any condition on that form that he had to buy something or apply for something, he certainly didn't see it. So he took the time out of his day to go down to this local eatery to claim his free calzone. But only after taking that time out of his day did he learn, once he got there, that in order to get your calzone, you have to apply for a credit card. And being a college student, he went ahead and applied for it. And he got it in the mail so many days later, and it had a $20,000 credit line.
College student?
For a college student without a job at 26% interest. This is what he reported to us. Of course, he shredded that card and he canceled that card and never used it. But it just shows what kind of access to credit was being given to people under 21. He was a sophomore at the time, and this is no longer going to be.
Right. Under the Credit Card Act of 2009, they're not going to be able to do that anymore. They're not going to be able to hand out Frisbees and free pizza and tell T-shirts and all that stuff. That's no longer going to be allowed. If it is an affinity card, which is a card that is used by educational institutions, charities to sort of promote them, they have to disclose it. So there's this also, if they market to a 21-year-old, the 21-year-old someone under 21 gets the card, and then they want to raise the credit limit. If there's a cosigner on that loan, the cosigner has to approve it. So it's basically going to go back to the days like when I was a college student. I didn't have a credit card. Nobody had a credit card.
Well, nobody trusted you, Jill.
That's what it was.
Literally, that's true. You were a college student, and you weren't trustworthy. You have to build your credit rating in those days.
Right. So all that's going to change.
Well, we have noticed, or at least I have noticed, that the 7 or 8 credit card solicitations I used to get each day in the mail have dried up. I see them regularly still from the big banks, Chase and Bank of America, but not nearly like I used to. You mentioned affinity cards. A lot of you out there may have cards that have an association with some group, like, well, the National Wildlife Fund or Federation, or a societal group in the profession perhaps that you practice, because a portion of the money that you pay to the banks gets transferred to that group as a support. I have a West Virginia State Bar credit card. It's not financed by the State Bar, but they sign on to it, and I think 1/10 of 1/2 of 1 mil of 1% is transferred every year to the State Bar for their charitable purposes. But now companies are getting into it. Woot, Yahoo, all have their own credit cards, and I suspect they're getting a bit of the take back to them too. So if you want to support a charity or something like that, that's a great idea, but do you really want to support General Motors? Well, maybe General Motors is a charity now, but big companies, you get nothing by having those names on your card. What else should we watch out for?
Well, one of the best things that is happening with this new piece of legislation, it's something that Senator Dodd, and I think he's from Vermont, has wanted for years, and that's a disclosure. A disclosure that says, look, Dan Ringer, you have a balance of $25,000. Your minimum payment is going to be $150. And if you make this minimum payment, you're going to be owing this credit card bill for the next 30 years. So they have to actually have a disclosure on there that says it's going to take you 150 months to pay this off, and you will owe, instead of paying $25,000, what you'll pay in principal and interest will be $75,000. So, that may make somebody hesitate.
Well,
they may actually look at it and say, you know, maybe I need to pay more than the minimum payment.
the $2,000 big screen television set that you've got your eye on may cost you $4,000 or $5,000 at the end, and if you know that fairly, you're going to have a much better chance at managing your finances. Jill Miles, West Virginia Deputy Attorney General, Chris Hedges, West Virginia Assistant Attorney General, thank you both for being with us.
Thank you.
Thanks.
Thank you also for being with us. On behalf of the Law Works, I'm Dan Ringer. Good evening. If you want to know if you need a lawyer, you can discuss your problems with a lawyer by calling the West Virginia State Bar Helpline, toll-free, Tuesday evenings from 6 to 8 at 1-800-642-3617. On the LawWorks webpage at thelawworks.org, you'll find a listing of recent The LawWorks show topics, information on how to obtain copies of the programs, and additional information about this show's topic. You'll also find a list of legal resources that can help you answer your legal questions. If you'd like to recommend this program to a friend, you'll also find video of this program on thelawworks.org. If you would like to suggest a topic for a future The Law Works show, or if you're a school teacher and would like to receive a copy of this program for classroom use, please send us an email to thelawworks@comcast.net.
The Law Works is produced in cooperation with the West Virginia State Bar, the Mountain State Bar, and the West Virginia University College of Law. The Law Works is made possible by the generous support of the West Virginia State Bar and the Monongalia County Bar Association.
From West Virginia Public Broadcasting.